Good Monday morning, everyone. Thanks for joining the Market Chameleon pre-market show. Before we get started, let's take a shared disclaimer in the market for myself or registered investment advisors or other. If you're searching for investment advice, please reach out to a licensed professional. This show, as all our shows, is for informational purposes only concerning Market Chameleon tools and products. With that, good morning, Dima.
Good morning, Will. How are you?
Good. How you doing?
Good. Good morning, everyone. Let me share my screen. And hold on a second, Will. Okay, here we go. And I think what we'll cover today is analyzing JP Morgan's earnings moves and options around earnings from a historical perspective. And JP Morgan is expected to report earnings, I believe, this week. So over here on the 16th, or I'm sorry, on the 15th, before the market opens. So in a couple days, and ahead of those earnings, let's take a look at how JP Morgan behaved historically around earnings to give us an idea of the potential movements in the stock, and help us get a picture in case you are looking to search for opportunities or manage your risk in JP Morgan. This will give us a perspective from a historical perspective. So let's start. To get to this page, if you type in JP Morgan in the search top, just type in JPM, the symbol, and when you click enter, you're going to come to this summary page. And on the left-hand side, you see this menu. Under earnings, we're going to go to interactive charts. And then we'll come to this new summary page that shows us some statistics on its historical earnings, and then we could dive deeper into those statistics by clicking on it and going to that page to pull up more data. I'm going to close this menu to the left-hand side to expand our screen. And you'll notice that we do have some filters up here, which I'll show you how to use. But first, let's just go over what these statistics are all about. And on the top over here, the implied earnings moves. These are coming from the option prices. And what this tells us is right before the earnings announcement, historically, on average, the options implied a move of up or down 2.9%. So if we're looking at the straddle, and the straddle's trading all the way up to the close right before earnings, and where does it usually end up? That's what the question is. Where does it usually close at right before the earnings announcement? And this kind of gives us a potential target on average where it usually closes, and we could compare it throughout the day or leading up to earnings where the straddle is trading ahead of that. So this is letting us know that the average is 2.9%. And if we click on it, click on this number, or we go to the right-hand side and click on Implied Earnings Moves, it'll take us to a new page. So let's click on it just to get an idea what that looks like. And here, this little blue bar, this is tracking the current earnings strat. So this is looking at the option straddle that will cover earnings, and it's telling us where it's currently priced. Now, of course, we still have a couple days to go, a couple trading days to go. So it may, besides the earnings move, it will probably also include some volatility prior to that. And we would probably expect it to be, a little bit higher. if we hover over it, we see that the current earnings straddle is priced at 3.8%, up or down 3.8% relative to a historical average straddle of 2.9% right before the earnings announcement. We also see a range here because all these gray bars are telling us what the straddle was prior to earnings for each of these observations, all these quarters. So you could see going back to 2014, we see that where the straddle closed, and this dotted line is the average of all of them. So you could see there are ones below that, ones above it, and we see that they're not always consistent at 2.9%, right? There's fluctuation there. We had some really big ones up here, some outliers, and we had some over here that, were below that line historically. So what is the high-low range? Well, the high we see over here, 7.5%, the low on the low range, 1.8%. The median, if we take all our observations, sort them from highs to lows, and look at right in the middle, half of the observations are above 2.7%, half are below. So this now gives us kind of an idea of, where the straddle is currently priced relative to historical values. And if you have maybe a particular opinion that you think this time around we're going to be on the high end, this time we're going to be on the low end, now we have, these observations to reference. So that's looking at it from a implied straddle, the option prices. So let's go back to that summary page. Well, before I do that, actually, I did say that we're going to use some of these filters. So this is looking at all the observations historically, including the first quarter, second, third quarter. So we have earnings 4 times a year, and this will include those data points. We could narrow it down and look at only fourth quarter earnings because JP Morgan's coming up with Q4 earnings, and maybe those observations look a little bit different. Maybe the straddle tends to be higher or lower on those observations. So let's take a look at what Q4 looks like. So, and to do that, we could use these filters here. So you could see Q1, Q2, Q3, Q4. You could press Q4. Now, if we calculated the stats, now we see an observation only once a year because that's Q4 is only reported once a year. And here we see that on average, the straddles closed around a 2.7% premium. So that's a little bit lower than the other ones at 2.9%. We see the max of 3.6, min 2, and median 2.7. This is where we are now. Keep in mind, we still have a couple more trading days to go. But it did tend to get priced a little bit lower on average. Maybe it could have been that one really big one out there because the median is still 2.7%. So that's one way to just narrow down the data. If you wanted to look at the more recent data, you could say just show me 6 years, 4 years, and so forth. Let's go back to all the observations. And I'm going to click on this summary. This takes us back to this page again. So now that we got like a quick idea of what the options tended to price, what about the actual earnings moves? That's what the options anticipated. They priced it in. But how did that compare to the actual moves in the stock after reporting earnings? So that's what this is over here. And on here to the left-hand side, we have these 3 numbers, and these are all in absolute values. In other words, it converts all the moves, positive or negatives. They're always positive, and converts the negatives to positive. So we could take averages and get the absolute moves, because a straddle doesn't matter which way it moves, up or down. It's looking at the magnitude of the move. How far away did it move from that strike, right? How far away did it move from that, the money? So we convert those to absolute moves, and then we compare from three different perspectives over here. One is just looking at the earnings move, and that's defined from the previous day's close to the next day's close after reporting earnings. So the previous day's close before reporting earnings to the next day's close after reporting earnings. So it could have, reported after the market, before the market, but it doesn't matter. It looks at close to close, before earnings, after earnings. That averaged 2.2%. Again, if we click on it, we'll go and see more details. But let's just go over these three. The next move looks at the opening gap. So the opening gap is looking at the previous day's close to the opening price the next day. Okay, so it's just looking at that movement, previous day's close to the opening price instead of the closing price, opening price, which gives us the initial reaction of the stock, at the open, given that the news has come out. So what was the move here? On average, 1.9%, which if we compare the two, it's indicating that after that waiting to the end of the day, the move tended to stretch out bigger, right? The gap didn't tend to close. The move tended to widen out from the open. So if it opened up, down, the move continued, or got bigger from the open to the close. So if these were reversed, let's say this was 1.9 and this was 1, well, then it would indicate that there was a large gap, and then the gap would have closed in by the end of the day. Okay, this tells us the reverse. The next movement we're tracking is the drift from the open to the close. Okay, so in either direction, it could have opened lower and continued lower, or it could have opened lower and then closed the gap and gone a little bit higher. But how much did it move from that opening price? Because if the opening price was, exact fair value and it didn't move anywhere, then we would have just been zero from the open to the close. There would be zero movement. But there's movement, there's repricing, the repricing continues. So how well was that price? And here we're seeing that from the open to the close, the average move was 1.5%. Okay, so there's still volatility intraday. Even though the news was out, the stock got a chance, investors got a chance to read the news, put in their orders at the open, trade at the open. But even after that, we still had volatility up or down 1.5%. And that's important, especially you're going to see a lot of trading activity in the morning, right? And a lot of after the news is released, you're going to have traders looking at those numbers and expressing their opinion in the option markets right at the open. Some are going to be closing out of prior positions that they have established, and now you're looking at the options in the morning, and you're looking at the straddle and the implied volatilities where they're opening up at 9:30, 9:35. But it's important to know, well, how much more volatility can we see? Is volatility getting crushed right at the open, or are we going to see more volatility from now to the end of the day. So this is looking at the intraday drift from the open to the close. And now we got, 3 different perspectives of price volatility and movements around earnings, from close to close, from previous day's close to the open, and then intraday from the day's open to the close. Okay. And if we click on one of these, or select it from the right hand side, it will show us the data, how we got there. So let's take a look at the earnings moves. Click on that, and now we get these observations here at the bottom graphically, and summary statistics up top. So over here, these are the absolute averages of all these. So you can see here the 2.2%. The biggest move in absolute terms was 7.6%. The smallest move from close to close was almost unchanged. And the median move, which half the observations were above, half below, was 1.6%. So these bars over here pointing up show us the magnitude of the move. When the bar is red, that means the move was to the downside. When the bar is green, the move was to the upside. So the one I'm hovering over on April 23rd, the stock moved up 7.6%. Okay. This red bar, the stock moved down negative 6.5%. But we could still compare the magnitude, right, by how far the bar goes up. We also see the simple averages here just to see if there's some kind of skew or tendency for the stock to go up more than down. And here it says the average moves of all of these was almost unchanged. So if we averaged out the pluses and minuses, it's almost unchanged, a little bit negative. The biggest move, the best move was up 7.6%. The worst move was down 6.5%. So now we get this range of extremes, up or down, right? From up 7.6% to down 6.5%. And the median move is negative 0.3%. So there's a slight tendency in these observations to be more negative than positive. Okay, not almost 50-50, but slight tendency from the median. And if we wanted to just separate positive moves and negative moves, 48% of the moves were up, 52% were down. So almost 50-50, but again, slight negative, a little bit more down moves than up moves from a historical perspective. All right, and then this blue bar, this is where the straddles price right now. If we wanted to narrow this down to fourth quarter and see if these change, we could press on this, Q4. Then this retrieves just Q4 data for us and recalculates the summary stats. So you could see here, the average move, 1.8%. So not as high as the if we averaged all the moves out. Best move 6.1. I'm sorry, the biggest move 6.1%, unchanged, and median move 1.5. And you could see here the average. On average, if we averaged out all the moves, it was negative 0.4%. But the best move to the upside was 2.5%, worse 6.1%, and the median 0.5%. So here you could see that even though there were more up moves than down moves, 64%, the greens were up, 36% of the moves were down, but the magnitude of the moves are different. So the average was negative 0.4%. That's because you got this really big outlier. So here it just shows that in the fourth quarter, we had the frequency of the moves were higher. The down moves could be pretty extreme, higher, more than this down move is higher than any up move we've seen. So that's the distribution of returns for JP Morgan for the Q4. Let's go back to all. And then back to the summary. And we could do the same thing with the opening gaps. If we're just interested in that initial opening gap, and if the strategy is, taking the risk from the close to the open, what does the stock look like? We click on here, 1.9%. And now we see the opening gap moves. So here we see and by the way, once the market's open, then you could start hedging as well. So not necessarily even have to get out of all your risk, but you could start mitigating risk and start hedging, because once the market's open, the option market's open, you could start doing things to hedge and mitigate risk. So the gap move on average was 1.9%, with the biggest move 4.8%, lows almost unchanged, and median move 1.7%. If we look at simple averages, averaging out pluses and minuses, it was 0, with the best move 4.7%, worst move 4.8%, median move 0.5%, and 59% of the moves gapped higher, 41% gapped lower. If we took just fourth quarter, here we see, there's slightly more positive gaps, but on average, they were lower because of that. You can see here the gap move down here was bigger than any gap move up. Okay, so that's really quickly how we could start looking at the data to see potential moves from a historical perspective. We could look at extremes, averages, and medians, and then compare those where the market's current implied or anticipated move is priced. So let's just do one more with the intraday. So intraday move 1.5. Here it is. And what this is, again, letting us know the moves from the open to the close. So this is going post earnings release and the initial opening, right? So that could be a different strategy. Once you know what the earnings are and they release them, and you see the numbers, maybe the press releases, potentially a conference call. Well, now there's more certainty. So how did the stock move around after that, at the open to the close? So here, on average, moved up or down 1.5%, with the high move of 5.6%, and low move of unchanged, and median move of 1.2. Simple averages, negative 0.1. Best move up 5.6%, worst move negative 5.5%, median move 0.1, with up and down moves 50-50. So that's given us the perspective of how the distribution of returns of the stock post earnings, trading the day, after it, from the open to the close, post earnings. What about fourth quarter? Click on that. In here, you get the same stats, but only for Q4. Okay. I'm going to come back to the all. Let's go back to summary. And really quickly, I'm going to end here, but this is looking at the simple returns instead of absolute. The simple returns looking at the max move to the high from the open, from the close to the high, from the close to the low. And this is looking at the average straddle return. So because we have 5 minutes left, I'm just going to talk about what is the average straddle return. That's if you took the straddle from the day prior to earnings, and then you looked at that same straddle, the close the day after earnings, did it increase in price, decrease in price? Did it appreciate? Did it depreciate? What was the return? Right? If that's what this is looking at. On average, over all these observations, the return was negative 10.4%. In other words, from the historical observations that we looked at, if you bought $1,000 worth of premium each time in straddles, right? Call and put, you invested $1,000 each time in premium. Well, on average, you would have lost 10%, 10.4%, $100, a little bit over $100 on all these. So that's the average, right? That doesn't mean every time 100. Could have been instances you lost everything. There are instances, you could have made or lost a little, made a little, but that's the average, negative 10.4%. So if you click on that, here's the straddle returns. So you could see how this averages, but you could see that there was a straddle here gained 152%. Look over here. Right? There's a big move, and the straddle increased and returned 152%. The worst was a 90% loss. So whatever the straddle was the day before, the next day it lost 90% of its value by the end of the day. The median, where half the straddles did better, half the straddles did worse, is negative 30%. So you could see that 73% of the straddles lost value the next day, 27% gained in value. In other words, the 27%, if you bought the straddle, the next day it was worth more. 73%, the next day it was worth less. What about Q4? Let's see if that's the same. Let's see if these numbers change. So I'm going to click Q4, and here we go, negative 18%. So even, there's on average, it lost more on Q4. And, you could see here, 18% gain, 82% lost value. Biggest gain is 152%, worst 78%, median 34%. So that's how the historical returns look like for the option straddle. Well, I'm going to end right there. We're out of time.
It was great information, D, going into earnings season. Rob, in particular, was very interested in. He actually forgot this tool existed, so it's great re-showing tools that have been around to the Chameleon community. Great job as always, Dima, going into earnings season. Thanks, buddy.
Thanks, everyone. Stay safe out there. Have a great trading day. And we hope to see you guys tomorrow. Tomorrow, we're also doing a webinar with Interactive Brokers. Forgot to mention at 2 p.m. You have to register, and that will be on implied volatility seasonality.
Yeah, let me bring that up on their site so I can link in the chat. Thanks for reminding me, D. That is run by Interactive Brokers, so you have to go to their site to register. Great job, my friend. Everyone have a great trading day.
Thanks, everyone.
Follow us on YouTube. Great job, D.
Bye.